Today, we're going to talk about probably our favorite planning strategy, long-term care. I know you guys are probably just as excited about long-term care as we are. Without any further ado, we're going to talk about where long-term care has been and where it's going. Jeff, take it away.
All right, remember long-term care, you make a premium payment into an insurance policy, and if you can't do a couple of the activities of daily living or have a cognitive event like Alzheimer's, then coverage gets paid out from that insurance company to take care of you. Traditional long-term care, two major flaws in that type of strategy. The first is you don't know what your premium payments are going to be from year to year. Lately, we have seen some major increases in what that coverage cost is, even though you've been making payments for the last 10 years or 15. We're talking increases of about 80% in some cases on those types of coverage. Imagine that surprise in the mailbox when you get your annual bill.
Nobody likes surprises.
Nobody likes surprises. The second major flaw, and we think it's huge, is the use it or lose it type of mentality of that strategy. If you never needed care, if you got run over by the bus or had the widowmaker heart attack and you never had care, all that money that you paid into that strategy or that protection is gone. It's zero. It's a sunk cost, if you will.
And I think today, consumers have demanded a better mousetrap.
Yeah, and there is a better strategy that's out there. Let's draw the picture, Nick, of what we call the hybrid life insurance policy. It is a life insurance policy with a long-term care rider on it. The way that it works is fantastic. So you make a premium payment into an insurance policy. The beauty of that premium payment is you know exactly what it is going to be and for how long. That's one of the levers that you can choose when you're buying the policy. It will never increase in price on you. That benefit that policy kicks out is twofold. First, there is a death benefit that is involved. And second, there is coverage if you should need care either in your own home or at an assisted living or at a nursing home. There is coverage that's associated with it. And let's use a real life example of a client of ours that we utilize this strategy for. So a 60-year-old female, non-smoker, in good health here in North Carolina. What we did was decided $5,000 a year as her premium payment that she will pay for the rest of her life. That was the decision. What coverage does that get? Well, right off the bat, day one, there's a death benefit of $250,000 for her. So if she makes premium payments for the next 20 years, she's paid in $100,000 and she passes away at that point, her beneficiaries are going to receive $250,000. And in most cases, her case, it's going to be a tax-free death benefit to her heirs. A fantastic return on that type of strategy. But the real protection feature comes in the case of the long-term care or the home health care that's associated with it. It creates a silo of money, a bucket of money that she can utilize. It's $250,000 that she can take out as $5,000 a month increments to help pay for the care that she may receive in the future as she gets older.
And those are also going to be tax-free withdrawals as well.
Yeah, so a great example of how to avoid taxation, barbarian, and how to really protect against the healthcare barbarian. We know our clients are going to experience either taking the escalator up to heaven or taking the elevator up to heaven. If they take the escalator, typically the people that are going to give them care are going to be their loved ones. It's going to be their spouse or their children, if available, are going to give them care. The next step on the escalator is they want to stay in their house, so they get at-home care. Well, that comes at a cost. And in North Carolina, that average is around $24,000 a year. The next step on that escalator is going to an assisted living type of facility. And the average in North Carolina for that, over $48,000 a year. The next step on the escalator before you get to heaven is going to be the full-fledged nursing home. That's where you need round-the-clock care to do your activities of daily living. Unbelievably, in North Carolina, over $90,000 a year for that type of coverage. So if you take the escalator up to heaven, the payments that you're making to take care of the care, where are the dollars coming from? That hybrid life insurance policy covers that with one of the benefits. But if you take the elevator up, if you get run over by the bus, if you have the widowmaker, and you go up to heaven directly and never need any care, the hybrid life insurance policy's death benefit helps offset the cost of your premium payments.
It's a great point. We want to make sure that you have a game plan on whether you take the elevator or the escalator.